That's what tonight's about. My goal is that every one of you leave tonight knowing something a little more than you did when you came in the room, and what you do learn, what you do take out of the room, makes you more valuable, more powerful, more effective, more attractive to the business world than when you came in. And what I'm going to try to do in our hour together is identify what I consider to be the 10 most important things you need to know to be the CFO of your own life, to add value to you, Inc. What are the 10 most important financial principles you need to know? And in addition, and you'll get this on the handout, which you get at the end of the evening, I've listed 50 terms or concepts that I think you need to understand to add value to you, Inc. So to repeat, we're going to go through, and fairly quickly, because we only have an hour together. By the way, I want to thank the Yankees. I'm glad they won last night, because I wouldn't want to be competing with the 7th game of the World Series tonight. Holy cow, I was thinking if this was the 7th game, I'd be sitting here talking to my wife, who's in the back of the room. So 10 principles that we're going to identify that will add value to you, Inc. And within those 10 principles, 50 terms, 50 concepts, like Kaizen. Kaizen would be one of the 50. There's 49 coming, that will make you more attractive to the business world, more attractive to the business community. All right. Number one principle that I think is important is what I call awareness and reality, or realism. So now you're the CFO of you, Inc. How can you make yourself more valuable to the business world? And I talk, in my opinion, number one, be more aware, be more realistic. And by that I mean be more financially savvy of your own particular situation. How many here, there's no right or wrong answer, how many here in the last 2 months, 3 months, have made a budget? Let's see, 1, 2, 3, about a third. I congratulate you, applaud those who have. Most people don't make a budget. Most people kind of have a rough sense of how much comes in every month or week and how much goes out. And of course, sometimes you get in trouble when you don't know how much is coming in, and of course, what's coming in may be less than's going out. So making a budget, be aware, be realistic about what you're spending. Every business in this country has a budget. They may not call it quite that, but they all have a profit and loss statement or some kind of operating statement. So number one rule for you to add value to you, Inc., and I applaud those who already do it, make a budget. Make sure you understand everything coming in and everything going out. Number two rule, and I'll hold this up again, our friend the Internal Revenue Code gets in the way of making a budget. Now remember, the Internal Revenue Code is about 3 times this. The Internal Revenue Code is the one who stands between your gross pay every week and your take-home pay. How many of you think, when you think, okay, I'm making whatever it is, $500 a week, $1,000 a week, and then you look at your check and you say, holy cow! How many have ever had the reaction, gee, there's a lot taken out of my paycheck? Yeah, of course, me too. There was a joke flying around. I saw it the other day. It was a simplified tax return. Simplified tax return. It said, how much do you make? Send it all in. Very simple. It's not quite that bad, but it's bad. How many know why your gross pay and your take-home pay are different? Well, part of it is this Internal Revenue Code. It's 3 things, really. Social Security, out of your dollar, every dollar you get, 6.5%, that's 6.2%, excuse me, goes to Social Security. Social Security is like a forced savings account. The government says, we want to make sure that when you retire at age 62, and you get your full Social Security benefits at age 67, but when you retire, there's some money there for you. So we're going to give you Social Security when you retire at age 62. But you got to pay for it now. So out of every dollar you make, we're going to take 6 cents. Then there's something called Medicare. The government also takes 1.5 cents out of every dollar you make to pay for medical insurance, so that when you're 65, the government can give you medical attention in the form of Medicare. And then finally, there's our friend, the Internal Revenue Code. Okay, and that's the biggie, because you all know that the government takes out taxes out of your paycheck. Now, when you're hired for a job, you've probably heard of or seen a form called a W-4. A W-4 asks you this question: how many exemptions do you have? Have you ever heard that terminology, exemptions, when you get a W-4? And exemptions are usually you and how many people in your family that you're living with or supporting. And the government then says, okay, you got so many exemptions, we're going to assume you're entitled to so many deductions. Deductions are the difference between gross income, taxable income. And then we're going to tell your employer how much he or she has to take out of your paycheck every week, and send in a lot of it to us, the government, so that they don't have to worry about getting your taxes paid at the end of the year. They already took it out. So by the time you get your net check, there's this huge gap between what you thought you were making and what you're receiving. And that's a big problem with budgeting. Some people sit down, they make a budget, they say, okay, I make whatever, $25,000 a year, $50,000, $100,000, whatever it is, but they forget our friends, the government, wants to get Social Security, Medicare, withholding. Now, I don't know if any of you have heard, a lot of people misunderstand something. They hear that if you start making too much money, your tax rates are going to go up. So they say, gee, I don't want to make that much money because then my tax rate goes up. Do people here who understands, and be honest, because as you're going to hear later in my presentation, one of the most important things about being the CFO of your own life, about adding value to you, Inc., is not to be afraid to ask questions, not to be afraid to understand something. We're going to talk about that. We're going to talk about Ponzi schemes, about a guy named Bernie Madoff and how he stole billions of dollars because people were too afraid to say, you know what, Bernie, I don't get this. So, okay, so do people understand here the progressive tax system in the United States? Do people get, how many get that? Okay, some. What that means is there are brackets. So let's say you make $30,000. Your first 10 is taxed at one level, your next 10 at another level, your third 10 at another level. I'm going to give you, when you walk out tonight, a chart that's going to show you, give you a rough sense of how it works. So, you know, if you're single, if you're married, it's going to explain to you how the taxes work. But the message here that I want to make, because I don't want to go into a long dissertation on income taxes, we'll all be sleeping here tonight if we start talking about income taxes. And I did invite, by the way, to come hear me tonight, my accountant of 25 years, John Doherty, the fellow in the blue shirt. He's really smart, and he's willing to stay afterward to answer any questions you have. He'll be here till 10, 11, however long you want him here. I'm saying that without his permission, of course. But he's here to answer any questions you might have about income taxes. I don't want to linger on income taxes. It's too painful and dry a subject. But I do want you to understand, in making a budget, you really got to remember withholding, Social Security, Medicare. If you don't take that out and you just figure your budget on your gross pay, you're going to be way off on your budget. And the problem with underestimating on your budget is the difference is debt. That's what bridges the gap. When you're living higher than you can be, and all of us have at different points in our life, and some of us are, the difference is debt, or you eat into your savings. So if you're going to be the CFO of your own life, and if you Inc. is going to be valuable, you got to have a realistic awareness of how much is coming in, how much is going to the government, how much you're taking home. Okay, so those are the first two principles: awareness, reality about what's coming in, what's going out, and understanding of how the government works to take money out of your paycheck, so you work your budget not on your gross pay, but your net pay. Okay, so we got two of our principles.